Hi, this is Mike Swanson. I'm here with Dave Skrika in the Bahamas at his place. Last year, we did a little investment conference down here, had about 50 people show up, and we were going to do one this year, but we ended up getting really tied up with different projects that we're both doing, and we're most likely going to do one next year. But
Yeah.
So we'll be telling you more about it as we plan it out, but right now, though, we wanted to talk about what's happened in the stock market, because we had this big drop on Thursday. The Dow was down 1,000 points and really took people by surprise.
We don't know if it really was down 1,000 points, though.
Well, that's what they're saying. That it was, some of the people are saying it was a computer glitch, or CNBC was saying there was a guy, Fat Fingers, who typed the wrong thing on his computer.
That's nonsense.
So you don't believe that?
Well, I think there was some kind of computer glitch, but I think it was caused by kind of screw up in the system, which was caused by selling. Like, I don't think it was like a computer glitch where some guy hit a wrong button.
Right.
Because a lot of people couldn't get into their accounts. And this often happens when there's these crises and panics and stuff, because you have abnormal volume and you have people maybe trading or panicking or buying or selling more or the whatnot. So I think there was some kind of glitch, but I don't think it was just some guy hit the wrong button. And I think it was actually caused by, legitimate selling.
Well, I think the important thing to consider right now, or one of the things people should think about is, right now Greece is all in the news and was associated with the sell-off, and there's lots of turbulence now going on in the currency markets,
yeah,
in the European market. But one thing about this is the market was correcting anyway.
Yeah.
We topped out in the middle of earnings season, and the market was very overbought, and sentiment was very bullish. In fact, the Investors Intelligence numbers had the most number of bulls since 2007, higher than there was in January when the market topped out. So the market was in a correction anyway. And then, on Thursday we were watching it, and the Dow was down about 400 points, and all of a sudden it was down 500 points.
And then it was down 6, and then 1,000.
In just a few.
It was a few minutes.
It was just a few minutes that we were down from 600 to 1,000. And I think what really happened was there was a liquidity problem caused by all this big selling and stop losses getting taken out and all this, and that's what really caused some strange things to happen.
But see, I also do believe there was a glitch, because I agree a lot of stops were taken out, but there was high volume. But I think also, because of the glitch, a lot of bids that were there disappeared.
Right.
Because if you look at Apple, we've talked about this today, Apple went down 40 points, and there would be 1 million bids in Apple at 210, 220, 230, and they really weren't there. And if there's a computer glitch, those would have just disappeared. I don't think they were lifted. I think they just were accidentally disappeared or something in the glitch. But again, I don't think it's because the guy hit the wrong button. I think it's because the system got overloaded and there was too much selling and then some kind of screw-up happened, right? But on the other hand, we were looking at this on my computer. I was showing Mike some of these small declines that occurred in 1989, 1997. See, usually when you have a bull market top, and a bear market top, it's like a whole, it's a whole trading pattern. It's a whole systematic way of starting, and usually the market just doesn't top and go down. Even the NASDAQ bubble, there was like a few weeks or month period of topping before it really began to tank, and we didn't really see that this time. We saw the market kind of peak and come right down, and that is more symptomatic of a correction usually when that occurs. And I was showing Mike what 1997 looked like and what 1989 looked like, and these were small, 10% corrections in the market, and it was the same thing as what just happened recently. The market had a kind of a false breakout, and then within almost 2 weeks, 3 weeks, it had these huge declines. And it's interesting is in the case of 97, it was again like a currency crisis and the Asian debt problem of that time. So similar to what's going on in Greece and the whatnot. So my opinion is it's not surprising. Obviously 1,000 points in a day was surprising, but the actual action itself, where it falls 7-8% in a couple of weeks, is actually quite normal.
Yeah, it's almost kind of what we were kind of expecting, I think.
Yeah.
Because I thought...
I didn't think it'll happen in 2 days.
No, I thought the market could correct here for several weeks and then be looking to buy in a panic washout day. And instead, it's playing out much different. I'm not sure, I suspect we'll see the bottom on Thursday retested, or at least close to a retest. And the market like what would happen a lot of times in the corrections we've been involved in is that they go on for a couple of weeks, then you have this panic washout day, then the market immediately takes off into a new uptrend. That's kind of what happened in February and what happened last July, for example. But this is different because that big move in one day takes a lot of. I think that's going to take time for the market to kind of shrug off and digest.
Another thing I showed Mike is after those 89 and 97 corrections, it's similar to kind of what happened now. You have this capitulation, and the VIX is up 40 and all these things, and then you kind of rally for a few days or even a week. You come back down, retest, have another rally, maybe even retest a month later. So there's this choppy action for a while before the market starts up higher. And I think that's how you'll really know. If this is like 2007 and it's a topping formation, you'll probably just rally from here very quickly, and then top out, and then move higher. You won't break out really on that rally. Or if this is a bottoming formation after correction, it's going to take a while, like a month or two even, to develop, or
Which I'm in the opinion, like I'm going to be looking to be buying, as we stabilize, buy some more stocks and to play a rally and so forth. And I'm going to evaluate the strength of that rally. But I think right now, I think we're both kind of the opinion that this is just a correction, and we'll see the market higher before the year's over.
The only way I think I could be wrong on that is I'm looking at there's a lot of support in the 950 to 1,000 area on the S&P 500, and if we were just to say quickly rally, have a dead cat bounce and then break all of that, that would actually look like a topping formation's in. Yeah. But I really don't see that happening because we already have so much fear. The VIX is back to 40. It hasn't been there since the financial crisis. We already have so much fear in the markets just on this little dip. I really don't think you're going to see a large amount of downside. I think to get back to the whole computer thing, one thing I really believe in is I don't think there's any retail people in this market at all. I think it's very, very minimal. And I think one reason we had this is because we all got, as our friend called it, the hedge fund robot drones, like pressing buttons and triggering their stops and all this sort of thing.
That was a thought. I haven't really said this to you yet, as we've been talking about this. But that was one thought I've had is that maybe that's exactly what's going on. That what happened on Thursday, I thought the market could be down 400 or 500 points or something. Those extra points were, I think, caused by this glitch or liquidity trap that causes the glitch or whatever it is. But it seems to me that maybe what this is telling us or showing us is that the stock market isn't really as liquid as it appears to be because there's not as many people in it as there once was, like you're saying. Like now it's dominated by hedge funds, institutional traders, and one thing about these kind of guys is they have a very short-term time frame of trying to hold stuff for no longer than really a month because hedge funds are graded on a monthly basis. So you can just imagine that when the market had that last rally in earnings season, a lot of people got caught, not in it, and they have to perform, so they bought in at the top, and then all it took was the market falling for a couple of days for these people to panic out. A lot of them might be on leverage, or who knows what. I'm talking about hedge fund people, whereas like a typical retail investor, they're not scared if the market drops 10% or their stocks decline 10%. Well, most hold, in fact.
Remember, I made the comment to you exactly that when the market was dropping. I said, I bet you a couple hedge funds just blew themselves up. And you're right, that's what it has the look of. That if you're all doing the same thing and they all have their stops at the same point, you trigger a bunch of things, and that's why it happens. But just as a note here, Mike and I both don't think this is gonna cascade into a complete collapse or anything. I think there's some worrisome aspects. One thing I was pointing out to you is that the TED spread's kind of been widening here. It's still not at near, the TED spread's at 35 basis points, which is not really that bad, but it was at 15 basis points just a few weeks ago, so there's a little more tightness in the system. So some things like that are happening which are worrisome, but I think for the most part this doesn't look like anything more than a correction.
Well, one last thought for everybody is that it's kind of ironic that I'm down here when this was going on, and because gold did really well on Thursday. And then actually the gold stocks were green for most of the day, and they barely went down. and that's like the one safe haven that really seems worth buying. Like I wouldn't buy bonds or anything like that. And you have your newsletter where you talk a lot about gold and all these kind of opportunities. So it's like the perfect thing for people to try out right now.
And I think actually that we're talking about the market, and maybe I'm being a bit hypocritical because we just spent this whole thing talking about the market, but people have to remember where the big kind of bull market trend is, and I think you can't lose sight of that. That gold has been holding up really well, and the gold stocks have actually held up well during all this. And maybe instead of just being obsessed with trading the market all the time, people, if you don't have it, have to look at having some kind of core position or long-term position or even trading position in gold, because it is kind of holding up well, and it is kind of the hedge against all this uncertainty.
Exactly. And gold in your newsletter is the perfect.
Yeah, we have a lot of gold
stocks,
stocks, and I do stuff in both the junior and senior markets in the gold stocks. And I'm still of the mind that gold's going much, much higher from current levels. And the one prediction I made recently, in a lot of my recent writings, both in my newsletter and for another website I write for, is that even if this euro crisis, the dollar were to spike up, that would be a currency crisis. So gold would benefit from that, and that's exactly what's happened. When the euro got crushed this week, gold didn't go down because the dollar went up. The gold went up as kind of a flight to safety.
So, well, we'll talk to y'all later, and like I said, take a trial subscription to Dave's newsletter and check it out.
Try it out.